Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. It has been a little while since I've had the chance to stream, so I'm excited to dive in today and take a look at a number of charts. There are a handful of things that have caught my eye over the past week or so, and now we're starting to see some things come together as price has been starting to pull back a little bit. We're going to be looking at whether or not right now is the time to buy the dip, and if it's not, then where may be the place to set up the targets. And we'll be looking at both Bitcoin and Ethereum. There will be a lot to cover, so I'm not sure how long it'll go, but there will be a lot of good stuff to go over. I think a lot of interesting things to talk about, and then also maybe some cool things to learn. With that being said, I'll go ahead and give a quick shout out. See some regulars in the chat. I appreciate you guys tuning in. Igor and Dragos, Crypto Elf, Bud Thompson, Hephaestus, I'm not sure how to say that. Nathan Weller, Sammy Sunshine, good to see you guys. Appreciate you chiming into the chat and tuning in today. All right, gonna go ahead and share my screen. And before diving into some charts, I am going to share a little bit about my recent trip to Las Vegas. Just had a great time. Was out of town it was Thursday through Monday, spending the weekend in Vegas for the Super Bowl with some of my dearest friends, and we sure made the most of it and had a great time. We had this awesome suite right on the strip, beautiful location, top floor, and even had our own pool table. I mean, how cool is that? Had our own bar over here, pool table. I mean, it was huge. It was ridiculous. It was like 5 rooms or something like this, and just probably the nicest room that I've actually ever stayed in Vegas. That was a whole lot of fun. Not only did we have the sweet pool table, but also had this sweet view. If you came up to the window, this is where we were looking out right down on the action on the Las Vegas Strip. So that sure made for a great time. And then we also got in some good golf while we were out there, played a couple sweet courses. One was called Royal Links. I've actually played there once before, and it is a really neat course. As far as I understand, it was started by Billy Waters, who is a very famous sports bettor, one of the most profitable sports bettors of all time, opened a golf course, and he mimicked a lot of many of the most famous holes from the British Open. The British Open rotates, I think it's 4 courses, and he picked some of the most iconic holes from those 4 courses and copied them and put them onto a course into Las Vegas. I mean, it came out really well. I mean, it was really well done. Here is a picture of the road hole, which is perhaps the most famous, where you're teeing off from these tees and hitting over the scoreboard on a blind shot, really long hole, just really a lot of fun. And here was the second day of golf that we got to play. It was at a course I'd never heard of called Rio Seco, and it was actually really, really sweet. You can see we had a view of the strip. Basically, as we're playing golf, we got a sweet view of the strip, and this is actually where Mike Tyson's home is in Las Vegas, is on that Rio Seco golf course. So that was really quite the treat. We had limos to and from the golf courses so that we didn't have to worry about drinking too much, and we were able to have a good time and still be responsible. So that was sure a heck of a lot of fun. Ended up even making some money on the Super Bowl. I had the Chiefs and the under, so scooped on that, and that sure was a cherry on top. And now I am back home, back into the swing of things. Been very busy this week, and will be very busy next week. The reason I was so busy this week is polishing off the final draft of the Hyperwave book, and that has been very exciting as that has been coming together. Leah and I have been working very hard on that, and I mean, we started less than a year ago to go from absolute scratch, nothing, just a blank piece of paper, to a book that is ready to be published in less than a year. I am feeling really, really satisfied with that work that we've put in, and also feeling really good about the product that we've put together. It'd been in editing for a couple months, and I hadn't seen it, and I was really interested to read it and see. You know, when you're writing something, you think it's really great, and then after a few months, when you kind of become detached from it, you maybe come back and realize, oh, geez, this isn't near as good as I originally thought it was. So that was something that I was really worried about, and after going through it again and kind of polishing off the final touches, I'm actually really, really excited with how it's coming together. So stay tuned. That should be available here soon, and then next week I'm going to be busy preparing for the Unconfiscatable workshop, which is going to be about advanced consensio, and that is something that I am really excited about. I have already kind of started putting it together a little bit, and have a lot of work left to do, but I'm really excited about how it's going to come together. I think it's going to be a really great workshop, and I would definitely recommend anybody who is in the area or anybody who is kind of on the fence at the last minute to give this a strong consideration, because I think I've got a really good offer that is going to be available to anybody who wants to attend. So if you go to unconfiscatable.com, you can scroll down a little bit and see workshops available. If you click on that, you'll see my mug that doesn't look near as good without the hood on, but what are you going to do? And scroll down, see only 5 seats left. So it is getting close. I don't know if we would be able to extend that if room runs out. I'm hopeful that we'd be able to add room, but I really don't know. It's entirely possible that these 5 seats, that would be it. So 5 seats left. The cost is $500, and what that is going to be a 5-hour workshop with me, 4 hours workshop, 1 hour Q&A, going over advanced consensio, and it's also going to include 1-year access to the MSR indicator. MSR indicator does cost $500 a year, so you're basically getting free access for a year if you attend the workshop. And I'm trying to put together a dinner for people that attend so that we can potentially spend a little bit of time, get to know each other a little bit. There's a poker tournament. I'll be at the carnivory dinner. A lot of fun stuff going on. So if you're on the fence, definitely give that some strong consideration, because I think there will be a lot there for people from the consensio workshop, as well as access to the MSR indicator. All right. So that is quite a ramble before even getting into some charts. One more thing I wanted to say is a big shout out to Kent. You know who you are. You got me this hoodie for Christmas, and I am absolutely loving it. Fits just great. Has the thumb holes in it just like I like. I mean, get me a hoodie with some thumb holes in it, and a simpleton like me is a very happy camper. That's about all that it takes. So I really, really appreciate that Christmas present, and I will look forward to seeing you at Unconfiscatable. I believe that you will be there yourself. So thanks again, and we'll look forward to seeing you out there. All right. Now, time for the why everybody is here. Hopefully not too many already tuned out as I ramble on about stuff most probably don't care about, but that's okay. That's my style. That's how I do it. So here we go. Looking at, is this the time to buy the dip on Bitcoin? There is one reason why I think it could be a really interesting opportunity to go ahead and be buying, and then there are a number of reasons why I'm personally going to be setting bids at lower prices. So let's just start out with the reason why this may be an area to buy the dip. So something that I kind of noticed, which is what made me draw in this line here, is something I pay attention to. I don't really talk about much. It's just something that jumps out to my eye that causes me to dig a little deeper. And I don't know if this will help anybody or not, but something I look for is what we're seeing right in here, where you see it's like wicks and then kind of rounding off of these wicks, where it's like, to me, this just tells me that a trend line needs to be drawn in, because it just looks so obvious that all of these wicks are following a trend line. All of these wicks just look like you could draw in a trend line, like so. And when you see these kind of wicks coming down and then getting these higher lows, that kind of line up with some action back in here, that tells me that it's very likely that there's some sort of trend line that the price is respecting, and that's why it is wicking and creating these higher lows off the wicks. So we could start by just kind of drawing in this trend line. But the issue is that doesn't have any other touch points. Like, that would not really be a trend line to draw in by any reasonable metric, to not have any other touch points with these back in here, like you would want to be, you know, looking something like this, like that, like that, something like back in there. That's reasonable. Something where you're just kind of connecting it out into the middle of nowhere before this has created a higher low. You're just kind of drawing it in the middle of nowhere. That doesn't make a lot of sense, even though it connects with these wicks very nicely. So that made me think, well, shoot, let's try a parabola. And sure enough, it seemed like that was a really nice fit. And even the wicks seem to fit the parabola a little better if I can get it on properly. Just kind of notice how this stair step up, like, look at that. I mean, that just looks like right here. You see how that's just rounding off? I don't know if this is making sense to anybody else's mind's eye but my own, but this like rounding action here really looks like a parabola should be a good fit. And I am very interested in continuing to watch as, there we go, something like that, as we are testing this. So this is the one reason why I think maybe this is a interesting area to buy the dip, is we've these lows creating this rounding action and higher wicks off of the support just really makes it look like a parabola is developing. So that is something I'm very open to, but I'm not buying here, at least not yet anyways. So let's take a look at why I am not interested in buying here. There are a number of reasons. Like I said, I could be swayed, like maybe this is the bottom, but I'm going to tell you why I think it isn't. Top of my list is the funding rates and the premium in the futures curve. When the future with the furthest expiration date on Bitmex, which is right now the June 26 contract, when that has more than a 4% premium over spot, that's when I start paying very close attention. A healthy premium is somewhere around 3.5%. Once you get over 4%, that is unhealthy and indicates that there are too many longs in the market. There are too many people being bullish. There are too many people who are so convinced that the price is going up that they don't care about paying a higher than normal premium on the future. So that's something that is very important to me and is a strong indication of either a local top or an area where we need to consolidate. When I'm seeing that, I always look for confirmation in the funding rates. When the funding rates are above 0.03%, longs are paying more than 0.03%, that starts to paint the same picture. If the funding rates are too high, it tells you that there are too many speculative longs. And that is something that I pay very close attention to. When you have too many speculative longs driving price action, and you have more than a 4% premium in the future, I am very wary of buying. And in fact, I start to look at it as a profit-taking opportunity if I am in a profitable position. So this is a situation where I actually was taking some profit in these in these levels due to that premium in the funding rates and futures curve was selling around 98 to 99. As a result of this trend line, and was also viewing it as a potential rising wedge. So when we were up here testing this trend line, I think we got to a 4-hour 9. Let's take a look. Yeah, so right here, this was a really interesting opportunity to take profit for me, and I definitely did. I took 20% off the table. We had that premium in the futures, high funding rates. We were at resistance both horizontally and trend. The top of that wedge being the trend, and this level right here being the horizontal. And you could kind of draw it as a zone. I guess that was the wrong horizontal that I pulled up at first, excuse me. So this one right here. So that's a spot where I'm absolutely going to take profit every time. And if I'm wrong, so be it. And then the rest of my position is moving in my favor, and I'm a very happy camper. If you guys remember, I was entering down in here, held through all of this, didn't take any profit through all of this. And then once we got up in here to the 98 to 99 territory, we're at a major level of horizontal resistance. We have a major level of psychological resistance right above us. We are at resistance from the top of this trend, and we hit a 4-hour green 9. So that's like, if I didn't take profit there, I would be kicking myself. I would be really questioning my overall approach. If we have that sort of setup and I'm not going to take any profit, even, you know, as I was wrong and price did continue to rally, much to my surprise. I did not expect this action at all. And I was very vocal about that in Telegram. I was really expecting this to be the local top. So this did surprise me, but when I'm looking back, it's like, okay, that surprised me, but does that mean I should have done anything differently? Absolutely not. Maybe I should have even taken more profit, because I mean, that is just such a setup that's like, you know, I don't know. I don't want to take more profit because I do think we're at the beginning stage of the bull run, so I do want to be aggressive with how much I'm holding on to. But that's a situation where you can't be results oriented. You know, I sold, price went against me. I didn't jump back in at a worse price. I didn't freak out. I said, no, I got 80% of my exposure left. I'm stoked. Send this thing to the frickin' moon, and you know, nothing would be better. If it does correct, now maybe I can look at re-entering at the same price. You know, that's an approach that I will implement fairly regularly, where we're at resistance, so we sell, and then if we break through resistance, we buy when it comes back to test it for support. That makes all the sense in the world. You cost yourself some fees. That's no big deal as a swing or a position trader. No big deal at all. It's completely nominal. So that is definitely something on my mind here. Is as price went through, it's like, okay, should I be looking to buy as we throw back and retest prior resistance for support? That's absolutely something I've been thinking a lot about, and again, I've decided to hold off at least for now, and there are a couple of reasons for that I will get into right now, and this TD sequential is one of the main things. This has pretty much been the only tool you've needed to buy dips for 2020. Let's take a look. And this is Tone's version of the TD sequential. I think I was just talking to him today. I think I'll be on his show on Thursday. So definitely keep an eye out for that if you are interested in watching a podcast with Tone and I. Should be a good one. Okay, so here we had a 9. Wasn't the exact bottom, but damn, was that close. 77.60 versus 77. I mean, you know, very close to the bottom right there. Right here, we got this 9 that the 8 was the bottom. The 9 was very close. But the trend hadn't turned yet. We were still bear trend here, so we're really not looking to buy these dips until up in here. So 9 right there on that dip. 9 right here on this dip. Again, this was something I spotted in real time. It was a falling wedge with a TD9. Pretty darn sweet setup right there, if you ask me. I didn't buy it because I had just entered at roughly very near the same price. So as price was right here, I wasn't buying it because I just entered there. When I'm adding to a position, I really want it to move in my favor, you know, a decent amount, kind of like what we're seeing now. But anyways, like I said, all that you've needed for 2020 to buy the dips, basically the bottoms, is the 4-hour 9s. So bam, bam, bam. All right, pretty sweet. So what are we at now? We're on a 5. Decent reason to conclude that maybe there's a little more downside. If history is showing us anything, that may be the case. Something else that we may notice is that those 9s are we can kind of start to look at some sort of trend line. Where these 9s are coming in, like this may be the median. Yeah, let's go ahead and draw in a channel. Okay. So yeah, maybe looking for geez Louise. If we got a 9 around 95, that would be super, super interesting. Maybe it's at this channel. Maybe it's just at horizontal. Definitely something to keep an eye on. Before getting into much else, I did want to share a strategy that I may have stumbled across that I'm definitely going to be giving some thought to. Tweeted out a little bit ago. I sure hope Google Chrome doesn't start freezing up on me. Let's see here. Okay, here we go. Here's a tweet from a couple hours ago. Working on a simple swing trading approach that combines EMAs with TD sequential on multiple time frames. Step 1, 50 and 200 EMA and 4-hour identify trend. Step 2, in bull trend, you buy 4-hour red 9s and cover on 12-hour green 9s. In bear trend, you sell 4-hour green 9s and cover on 12-hour red 9s. So if that was maybe a touch confusing, let's go ahead and take a look at what we're talking about. We just went over the buying the 9s on the dip. Probably should have left those arrows up. Let's just read real quick. Okay, so we say that right here, remember step 1 is look at what's the trend. Okay, 50 EMA crosses 200 EMA, bull trend. So now we revert to buying 9s on the 4-hour and selling 9s on the 12-hour. So we would have bought there, sell there, sell there, and sell there. It's pretty interesting how the 12-hour nines have called the tops and the 4-hour nines have called the bottoms. It's got me to thinking, and I think this could be a really interesting approach. Main reason why is something that I think a lot about is ratios. Ratios are extremely important to me, and is a main reason why I use multiple time frames. Consider when you're in a bull trend and you get a big, move to the upside, like a bull trend. What happens is you go like 2 steps forward, 1 step back, 2 steps forward, 1 step back. You have the bull move is bigger than the correction. If the correction is the same length as the bull move, well, you're in a range. Like for example, if you go up and then you come right back down to where you were, well, that's not a trend, that's a range. But if you're in a bull trend, what you'd expect is you go up more than you come down. So what is that ratio of the bull phase to the corrective bearish phase? What ratio is most likely for if you say appreciate 10%? What should be an average correction? And I think that this ratio, using the 4-hour and the 12-hour, when you're using the 12-hour to take profit and the 4-hour to buy dips, you're saying that you're expecting the trend, the kind of the impulse move, the direction, like here when when price is going up, you're expecting that to be 3 to 1 ratio of when it corrects. So you go up 3, down 1, up 3, down 1. That makes a lot of sense to me from a ratio perspective. If we're in a trend going up 3 and down 2, up 3, down 2, up 3, down 2, that's a really good way, for a trend to proceed. And if we're using the 12-hour as our profit take, well, that's a 3 to 1 ratio of the 4-hour. 4-hour being, divide that by 12 by 3, and so that's where that I think that makes a lot of sense. So you use the EMAs to determine the trend, so now you know which one you're expecting to last longer, and then you can use the lower time frame potentially to buy the dip. Something that I am definitely interested in experimenting more with. It'd be very easy to put that into an algorithm and get some back testing going. That would probably be the next step. I got a lot on my plate, but that is there you guys go. There's one for you. If any of you out there want to go ahead and get to work on back testing that yourself, I think it could be potentially a really powerful way to use the TD sequential. And that's something I'm always thinking about, is small little tweaks that you can do to give you an edge. How many people out there are using the TD sequential? How many people out there are using it exactly like everyone else, buying a 2 above a 1, taking profit on a 9, trail and stop, whatever. I would say 80% of people are using the TD kind of like just cookie cutter, not really making any innovations or changes, and therefore those 80% that are all using it the same, they're probably not, I would think that there's a big edge to be gained over them if you're able to just kind of find some tweaks here and there, and that's something I'm always thinking about. And this could be a very interesting tweak to the TD sequential that could allow us to gain an edge. So yeah, give that some thought. Maybe do a little back testing. Let me know what you find out if you do. I'm definitely interested in seeing if that is a kind of a viable approach. All right, let's see here. Okay, so before moving on to the next part, I want to just share another recent tweet. And that is right here from an hour ago. Here's a TradingView post that was published during the 2019 rally. It is titled "How to Buy the Dip." right in line with what we're talking about today. If I'm looking at today, is this a dip buying opportunity? Well, let's look at, what's my strategy for buying dips? That's probably a good place to start, right? So that at least it doesn't seem like I'm just totally pulling things out of thin air. This is actually stuff that I've used, for a while, and that's for the most part worked out better than it hasn't. So, how to buy the dip. There are two separate approaches. The first one outlines exactly why I'm layering bids from 92 to 96, and that is what I have already done. If price does flash crash down there while I'm live, I will get filled. Definitely very excited about the potential of buying 92 to 96 for a number of reasons that we will get into, all based on my approach for buying the dip. Okay. Is this going to let us load? There we go. Okay, so Sawcruhteez Strategies, how to buy the dip. And it's a good walk down memory lane to kind of come back and remember the calls for 1,000 and kind of how I traded that environment as a result of what I was expecting from hyperwave theory, and how I was able to navigate it profitably using Consensio and my dip buying approaches. And kind of what's fun to see is that you'll notice I was buying the bottom, like I bought the bottom. I was very had a high degree of confidence that we were bouncing from this area here. I mean, we just had a huge dump off, and some sort of counter trend correction was absolutely to be expected. And I was confident enough in that to go ahead and be buying. Might not do that today. It was against the trend, but that is a situation where we were kind of forming a bottoming pattern, and yeah, so I was buying there. But my problem was I sold right here because I didn't think that the bottom was in. I thought this was just a dead cat bounce and took full profit. So now what happens is looking at this like, holy shit, like what do I do? It looks like this really could be the start to a bull run. That really could be the bottom. So what do I do? Well, I implement my approach for how to buy the dip. And there, like I said, there are two. And my preferred is buying the dip with moving averages and trend lines and scaling in. So you'll see like as price tests the 50 on the 4-hour, scaling in 10%, looking to add as it falls lower, and get into some Consensio type of stuff. So yeah, go ahead and check this out if you guys are interested. Also talk about looking for these moving averages to line up with trend lines, and using that as areas to go ahead and set bids to buy the dip at support. And then also talk about some other approaches using horizontals, using Bill Williams fractals. Something else to take a look at for anybody out there who maybe doesn't actively trade as much. Have another article that's Advanced Dollar Cost Averaging Strategies, and you can find these on the top of every one of my TradingView posts. You will see, well, except for my indicator, ideas. So if you just go to any ideas, click on it, and then at the top you'll see how to buy the dip, advanced dollar cost averaging strategies. So that's all out there for free for you guys. Give that a look if you are interested. I outline multiple dollar cost averaging strategies that are a little bit more precise than most people talk about, I think. Maybe not. But just thought I would share as we find ourselves in a similar situation here, where fortunately I didn't, dump off everything at this huge area of resistance. I did, hold on in accordance with my view that this actually was the bottom. So now I'm not in a situation where I'm outside looking in, but I am in a situation where I am looking to pyramid in. I entered, my original plan was to enter in 3 tranches, starting with the first buy signal, waiting for stop loss to get to break even, which happened after here, and then going ahead and adding. And then after adding the second one, wait for the stop loss to get to break even, and then add the third one. This allows me to build very large positions without risking more than 2% of my bankroll. I enter here risking 2%. And if I get stopped out, I lost 2%. If the stop moves to break even, now I'm not risking anything on this entry. If I get stopped out, I lose 0. So that means I can enter again. I didn't here. I was out of town. I may or may not have if I wasn't, but I didn't. But once it got up to here, that meant I could enter another at risking 2%, and if I got stopped out, that second entry would lose me 2%, the first entry would lose me none, or maybe it even got into profit by that time. So I can do that 3 separate times and enter a massive position that I wouldn't be able, that I will be able to hold on to without risking more than 2% of my position. So that's what I'm looking to do now. And I mentioned in the tweet that I've got bids layered from 92 to 96. And let's see why. This is the perfect setup for me. Right here. This is what I dream of. Okay, so what I see here is the 50 EMA above the 200 EMA with a good spread, a proven trend, which is what I talk about in that How to Buy the Dip article. You got to wait for these to spread out after they cross. Once they spread out, now we are can have a degree of confidence that we're in a strong trend. So we've got the moving averages spread out, telling us this is a strong trend. And we've got them surrounding the trend line. So this is just a huge area of support for me. And absolutely, right here, it's at 89.50, the 200 EMA, but I expect that to continue progressing up into this area here before price is able to get down there. If it does, it may never. So this is where I am looking to, this is my lowest bid, is going to be based on this right here. And then my other bids are based on just this being a big area of support from the moving averages as well as from horizontals. So like I said at the top, like sure, maybe this is the bottom, but I'm not interested because of how much I would love to buy down here. And sometimes that'll mean I miss out and don't get to enter in. But when I buy up here and it dumps, now I'm kind of trapped in and I can't get this sweet price that I would love to buy. So that means I have to basically be patient and understand that I would much prefer to miss out on opportunity than to miss out on a great risk-reward setup. So if this was the bottom and I don't get an add, then so be it. I've still got a very good amount of exposure, and I'm going to be stoked to see as that goes up. If it does continue to go down, now we're entering this area where it's just a beautiful risk reward on a long. Anywhere in this area right here. And ideally, what I would really want to see is something along these lines that allows the most ideal setup possible would be just kind of consolidating this sideways, supporting above 95.50, allowing the moving average to come up. Like if we get price right here, that's where I start to bet really big. this would be the absolute perfect setup. And it's a good kind of lesson in that you need to know what your perfect setup is, so that when you see it, you're ready to take it in a big way. If you're getting these perfect setups are generally going to be very rare, and if you aren't taking advantage of them in a big way, then that could be enough to turn a break-even or losing trader into a winning one if you learn to spot your ideal setup. And this would be it. And maybe we don't get it, but if we do, I want to make sure that I'm prepared. Okay, so here, why this would be so ideal is we would have horizontal, we would have trend, and we would likely have moving average, depending on how long it took this to get over here, which would mean that the risk would be very well defined, and the reward would be huge. So I would be really hopeful to go ahead and bet big here. As it stands, I've got small orders entered at 96, bigger orders layered down to 92. If something like this happens, what I'll do is end up canceling those lower orders and bet big here. If we take off from here, then I'm just going to hold on. I'm not going to do anything. So right here, we'll say February 15th at 96.50. That's what I'm hoping to see. See that we got a tip out of the corner of my eye. Let's see if we got any questions. Beer money from the UK. Sweet action. Thank you very much, Jacques Hugo. Much appreciated. Okay. So yeah, pretty straightforward, basic stuff. Just looking for trend lines and moving averages. Trend lines are support. Moving averages are support. When you have trend lines, moving averages, and horizontals, it's good bet to make as far as I'm concerned. Okay. All right, looks like we are ready to move on to Ethereum. Pretty sure did I already cover the flag and cup and handle with you guys? Just in case I didn't. Was looking at this as a cup and handle with the target of 11,675. Still think that is in play, and if anything, the target maybe is higher as we've continued to maybe even get a higher kind of end to this cup. Like potentially, we haven't even gotten the handle yet. You could make that argument, and that if we do dip down to 92, it would provide an ideal handle, and that my original call was just a little early. Something like that could definitely still happen. So I think on the low end, 11,675 is the target, and that could potentially be adjusted up if we get a handle down from 10.2 and then break back above it. Another target that I have is based on bull flag. Been looking for 10,550 due to this bull flag. Still looking for that. So those are my targets, and that's just short term. Anybody that's kind of been following along knows that my long-term target is 20K by July. Okay, let's take a look at ETH. ETH is very interesting right now, and I've been lately saying that it's been in a more crucial area than Bitcoin. It was like in a do or die zone, is big time as far as I was concerned, and it looks like it is a doing, that's for sure. So let's take a look at, first let's just look at where I got in. Been getting some really great signals from MSR, which is awesome. We notice the short up here, close short here, open long here, and absolutely, I took that. Let's see, this actually should use traditional candles. Took this in a big way because it was such a sweet setup as far as I was concerned. We were, jeez Louise. Is this for real? Okay, trend line, that's all I need. So here we were kind of coming back towards a trend line, kind of had broken through this horizontal and were consolidating sideways, and then got this open long at 148. So boom, I went in with as much as I was willing to risk, 2% of the bankroll, and that has been working out great. Targets to trim were 205 and 225. I guess you'll just have to look at this alert. That is the first area I was looking to trim, right there around 205. And then, let's see here. Right in there was the second horizontal that I was looking at. So 220 to 225 were my targets to trim, and that has been executed. So now I will be looking to buy that back lower. You can see my alert here at 195. It says ETH pulling back and into a daily golden cross, question mark. That's what I'm looking for. Right now we have price above the moving averages, and they haven't yet crossed over, but we see the 200 EMA has started to trend up, and the 50 is very close to crossing. So some sort of action like that would be absolutely a pullback and into a golden cross, which would be another area where I would like to bet really big. From 186 to 195, I'm wanting to take a big bet on Ethereum. Not because I believe in it for fundamentals, but because I believe in technicals, and the technicals are screaming to be long. As much as I don't want to say it, it's just what the case is. So we looked at potentially pulling back and into a golden cross on the daily. We see that there will be support coming in from the 200 EMA on the 4-hour right here, around 195, 186, somewhere in there. We can start to look at a trend line. So yeah, I can draw this a little bit better now. Let's do like that. Now we've got this trend line. That would be, again, in that setup where you've got a trend line surrounded by EMAs. That would just be beautiful. And maybe it pulls down here and then just dumps to zero. Like, for sure that could happen. Wouldn't surprise me, being that it's basically a scam. So, you know, anything that you're doing, understand that there's a big amount of risk associated with any sort of position. Even though I think this is a good setup that I want to bet big on, that doesn't mean it's a good setup for you. You know, you need to start recognizing your own setups and not just, you know, blindly listening to people like myself, because that doesn't get you anywhere. I'm here blabbering on to try to help you learn to identify these setups for yourself, opposed to just seeing like, you know, to try to copy or anything like that. That's just not going to be, you're going to get wrecked eventually. It's just a fact if you don't know what you're doing. And instead of that, you know, take a small amount and learn what you're doing. There was a day when I didn't know what I was doing, and the only way that I survived, like I realized that, man, there's a lot of people out here making calls. Maybe I should just, you know, jump on the boat. If this guy's right this often, why don't I just copy all of his trades? It makes a lot of sense in the world. But I realized that I'm never going to become a trader myself. I remember specifically telling myself, I want to be the guy making those calls. I want to be the guy who is able to, you know, share analysis that other people want to copy. That was a very clear thought that I had in my mind. And I remember thinking, okay, well, I need to figure out how to find these setups for myself. And the only way to do that is to start out with a very small amount of money, because I'm going to lose. You know, I'm going to need to take my knocks, going to need to take my lumps, just like anything else in life. You know, when I started playing poker, I got my ass whooped until I figured it out a little bit, and I figured the same thing would be true for trading. It was. So spiel there, but highly recommend anybody to just try to start figuring out what setups are ideal for you. Maybe it's trend lines and EMAs, maybe it's fractals, maybe it is the Ichimoku cloud, maybe it's parabolic SAR, maybe it's a combination. Okay, so ETH USD Ichimoku cloud turned fully bullish on this close at 165. So MSR did beat it. I love seeing MSR beating the cloud. That isn't always the case, but I sure like seeing that MSR was getting us in right around here. And now what do we see is that the Kumo is also going to be a confluence of support. So yeah, really hoping to get me some ETH around 186 to 195. If it doesn't happen, no big deal. I've still got 80% of my position that was built at 148, and that one has treated me very well so far. Okay, anything else we need on the USD pair? I don't think so. Oh yeah, of course. The most important thing of all. Wasn't the best drawn one. Let's try again. Okay, one of my favorite patterns in the world, and one of the best setups that I have seen in a very, very, very long time, if not ever. I mean, this is about as ideal of a big W as you're going to get. I feel comfortable saying that. I mean, it's just perfect. Let's get on another exchange so we don't have that stupid alert bogging us down. Oh, sweet, another one. I've obviously been pretty excited about this one. Okay. We're at 50 minutes, moving along pretty good. Yep, there's another one. Confirms big W. I've been watching this one like a hawk. Hoping for it to go down and ready to bet on it either way. So it's not confirmed until you break above this here. And that is a major level, as we can see. Here, 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 here. Key level. So it's not a big W until it breaks above there. That being said, I cannot help but take this into account at this stage. And this is something I've talked about before, and it might be my #1 favorite pattern. It's hard. I think this and the Wyckoff are my two favorites. And reason being is because they work out so well with reversing the moving averages. Yeah, it's not the best example. I'm just going to talk through how I like to see it set up. Is basically, it's not what happened here, but it's often, and if I got the right time frame, it probably would be. So what'll happen is generally you'll be in this like bear trend with the shorter term below the longer term. Say orange is 250 is green. So you're in this like bear trend, and then this first bounce is going to be a bounce into the moving averages that gets rejected because they're moving down. They're in a bearish cross and they're moving down. And then the second, then right here is where it gets super interesting, because after you have gone sideways for this long, Now the moving averages are going to flatten out, sometimes turn up, and even kind of get some sort of cross down in here. That's just basically a terrible job of illustrating what I'm trying to. Let me see if I can get it on do it justice, because this is a pretty important concept to me. Yeah, here we go. So it's like a bear trend, we get a bounce in the bear trend, and boom, we run right into the moving averages, which are spread out in a bearish fashion, which means that should be strong resistance. Boom, resist. And then we find support at relatively the same area. Maybe it's a higher low, maybe it's a double bottom. And as that happens, now these start to come together. Instead of it being in a very bearish spread, very bearish trend, now they start to come together. And when they cross, that's where I'm looking to enter. I'm not really waiting for the big W to confirm. I would use that as an area to scale in, to pyramid in, but I'm wanting to build the majority of my position down in here, because that's when the moving averages are really going to start to turn bullish. And that's what we see here. Like here we did get a cross, but remember what I say about them spreading. See, it crosses, doesn't spread, cross spreads. Big, big difference, okay? So here we're starting to see strong signs of a reversal after getting that kind of W action there, with the longer term moving averages starting to come together. Here on the daily, they did actually get a golden cross on this action up, that's what I wouldn't really want to see. I'd want to see that reject before those golden cross, but depending on the time frame, there's going to be, golden crosses somewhere. So here we see bearish, all big spread. Now here, tight, small spread, easy to reverse that. Hard to reverse this. Hard to reverse this. Easy to reverse this. So that's why I love big W's so much, is because they work so well with my moving average crossovers. And let's see here, that's also why I like Wyckoff so much. Because when you are, see here, it's like boom, you have this low here, bear trend, strong momentum, big spread. These are all things we'll be talking about. Advanced consensio is the momentum and the spread as determined by, the momentum as determined by the spread of the moving averages. So here, very bearish momentum. Absolutely want to be on the short side. Definitely do not want to be buying into this sort of trend. But now, as the Wyckoff starts to take form and we go sideways, look what happens. Now the moving averages come together. And where Wyckoff signals entries, really? Right here and right here very closely line up with where the moving averages crossed over. Here they got, they converged, and you start to see the long-term flattening out. Not only do we have a spread here, but a sharp angle, both very important. Now the angle is flattening, the spread is decreasing, showing signs of a reversal, and we've got a pattern telling us that this very well could be the bottom. You got a bullish reversal pattern with bullish reversal on the moving averages, similar to what we're seeing in ETH. And for those that have been following along, absolutely, I was buying that Wyckoff pattern that was lining up with, you got the Wyckoff signal right here, and the moving averages were crossing over. I'm jumping in, big. So yeah. And one last thing on the USD pair, then we'll look at BTC pair and call it a day. So I'm considering this a big W just because it looks like such a sweet setup, although it's not confirmed, and really what matters is once it confirms you have a target. Right now I can't give you a target from a big W because it hasn't confirmed. Even though I'm just kind of thinking it's going to play out as a big W, that doesn't mean that it's confirmed and that we have the price target. So right here is where it would confirm, breaking above 370. If we can break above 370, target's 836. Love it or hate it, it hasn't happened yet. But seeing that sort of target to the upside makes me extremely interested in buying dips down in here. I might end up losing a lot of money, and I'll be totally fine with it. If I do lose money, I'm going to look back and say, I would much rather have lost that money than have pushed out on a signal this good. And that's not the most professional term, but you know, it's sometimes it's, you know, like the art of execution. So you not only do you need to recognize the setups, you got to execute them. And if you're looking back in hindsight, like, oh well, I didn't execute, but that signal would have lost me money. That's how you're gonna never make money trading, because then you're always going to be there seeing a good setup and being like, oh well, the last one I didn't take and it saved me some money, so maybe I shouldn't take this one. You'll never win if you are you know, missing out on good signals and feeling good about it because they were the ones that didn't make money. No matter how perfect the setup is, there's going to be a percentage that don't make money. Right here I'm viewing this as one of the best setups I've seen in years, straight up. I mean, I can't, no exaggeration, one of the best setups I've seen in years. And there's still got to be a, what, 30, maybe 40, maybe more % chance that it just totally falls apart and I end up losing a lot of money. And I'm totally prepared for that. Couldn't be more prepared. I love making good bets, and this is a good bet. And I can totally take my knocks if I am sticking to my system and properly managing risk. I'm just prepared to lose every now and again. Okay. I am certainly running out of breath here. I haven't been to the gym yet. It's going to be a long afternoon. So, I don't have a position on this, and that is because I went against my system. Gave an open long at 0.2169. I passed. And that can be a potential big no-no. For me, I am comfortable with using some other tools to confirm entries and to help complement MSR. So let's take a look. So we get this open long signal. After price had moved up 14% in about 5 days and was at trend resistance. Now, on the one hand, I could just say, I know that this is a profitable system, so I'm taking every signal no matter what. On the other hand, I could say that I'm going to use other tools to try to you know, help increase my profitability through increasing my strike rate. And that is something that I absolutely look to buy dips. MSR is set up to signal as the price is moving away. Like when you get moving average crossovers that are bullish, that means the price is going up. If you break a parabolic SAR that was bearish, that means price is going up. So MSR is designed to signal when the price is moving away, and that is where I will look for. If price hasn't moved too far, like we saw in ETH USD, great, let's bet big. Whereas if it has moved in a, you know, it's ran away from me kind of before the signal occurs, now I'm like, okay, where can we buy the dip? And this is where I was layering bids here down to here, 0.195 up to 0.02. I really thought that there would be a very good chance that we would get there, and we still might. So I did miss out on that, but I do want to definitely pay close attention to this market and this chart for a number of reasons. Another reason I was very hesitant to buy at an absolutely critical level of horizontal resistance. I mean, I am totally fine just staying away from this pair until it gets, we can even say, out of this range. This is a very hairy territory for ETH BTC, and not a situation where if I am entering, it's going to be in a small way. Because I have very little degree of confidence about which way this is going to go. I mean, this is, if you're confident that this is going to break through this key level of resistance right here, then I would think that you're likely on the delusional side. I don't see any reason to have a significant degree of confidence that we're going to break through this. Maybe it does, maybe it doesn't. This is a huge area of resistance that is key. It is critical. If we reject this, it's going down in a big way. Or maybe it just ranges. But even if we do break through this 0.0234, there's still, you can still look up to 0.028. If I have to miss out on any action that happens in here, so be it. This is not my setup. I am not interested in this. Whereas you'll hear me change my tune if we get something like that. If we break through all this and then come back to retest trend lines and moving averages and horizontals for support, this is where I bet big, okay? So it's, again, very important to understand where is your, perfected setup and where is your setup where you're just going to put a little bit in there and, let it do its thing. Because as we see here, often, almost, maybe always, MSR knows better than me. If I would have taken that signal, I'd be profitable. But if I and I probably should have, but just in a very small way. Okay, so here, this is kind of like no man's land as far as I'm concerned. Potentially, you can say that a W is kind of forming here. Yeah, I can see that. Getting close to confirming. Yeah, that's valid. Hasn't confirmed. Damn close. And what will happen is often with the big W, you get a cup and handle sort of situation. After the W completes, you get that. And then with the breakthrough of the horizontal, you get to measure a move like this. So that would sure be a sweet setup. Absolutely. This would be pretty much a perfected setup for me. If this big W plays out and then gets this ear, turns prior resistance into support, you bet your butt that I will be here buying and looking to add right here because there's a huge amount of upside. Big liquidity gap right here. I mean, these things get filled. They just do. Maybe it won't be on this time around, but it's very often that when you see these huge dump downs like this, you will come retested on the upside. Okay. One last thing, then call it a day. Another reason why I was not very interested in longing ETH versus BTC. We've got a 9 of the red variety on the Bitcoin market cap dominance on the daily chart. That indicates at the very least a bounce to the upside. Not at the very least, but for me, the two most likely outcomes from here: 1 fork candle correction or a full 9 count. So that's a situation where potentially that will be a spot to get entered long on alts versus BTC. If the trend is now that alts are gaining on BTC, if we get a 9 and get a correction, then that could be your opportunity to long alts versus BTC, like I'm looking at Bitcoin, ETH against Bitcoin. And let's see if we can do a little bit of trend analysis. Four-hour looking quite bearish. Oh, geez. A 1 to 4 candle correction, or even a 9 count, could be a pull up and into a daily death cross. How long has it been? Huh. Last death cross was a fake out. Interesting to see what happens there. Yeah. This line right here tells us to short alts against BTC. Anytime we've touched this line, we've probably gotten a lot of 9s there, near there. Let's see, sure enough. So let's say we're looking for 9s near this trend line as a way to short alts against BTC. Boom, right there. And of course, red 9s we're looking for right here. This trend line wasn't active yet, but it's important to look back and see, did this trend line does it follow the pattern of 9s near the trend line? So pretty interesting setup there. 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 So you can see that this is really a tricky spot to be. This is where I really want to let the market define itself. Let the market show me what it wants to do from here, from this critical juncture. Is it going to continue with the pattern of higher low off of this trend line and a daily 9 marking the bottom or very near the bottom? Is that going to continue? Like something like that, with another maybe fake death cross near the trend line. That, in my mind, would become pretty apparent if we either manage to get back above these before they cross, or they cross and recross like they did back here. So here, I may not have been interested in buying this 9. I would have been looking for something in here. And when I say buying that 9, this would indicate being bullish BTC versus alts. And the way to trade that in general is to short alts versus BTC. So here, I'm going to set myself an alert as a matter of fact. Okay. Hey. Yeah, right here. And I'm going to double click on it, make myself a note so that I know why I'm setting the alert. Bullish 50, 200-day EMA recross, question mark. Okay, so now if this alert triggers, I'm going to come here and look to see if we do something along these lines, like we saw last time, like that with the recross, and there's where a really interesting setup would be, where I'd be really interested in taking, maybe a medium-sized position, maybe even a big position, versus keeping our eye on if something like pull up and into the death cross, break down trend line, that bounce right here would be absolutely a situation where I would want to long alts versus BTC. Oh, geez. Computer's freaking out at me. And that's okay, because it's just about a day. So when you can learn to identify the really good setups, you can also start to identify kind of the not so good setups, and both are crucial. For me, the most crucial is the second part, is identifying if you can figure out where is a place to stay away and wait for further development, then you can likely get yourself in situations where you've got really, really high probability bets, or at least really, really good risk reward. And that is a good example of why I'm not really interested in buying Bitcoin up here around 98, 99 or so, because I see that, yeah, maybe this is an okay spot, but I see a really good spot below. And that does mean that sometimes I'm going to miss out, like for sure. And that's totally okay, because I am perfectly okay with missing out on opportunity if it means I'm putting myself in a position to capitalize on a really good spot. And that's where I'm very glad that I'm out of the ETH BTC trade right now, because this is very murky waters for alts against Bitcoin. Leading into the halving, I am having a hard time believing that alts are going to outpace BTC as its supply is decreasing. So I'm really interested to see what happens in here, and I'm prepared for both. If we break above 68 and then turn that into support, kind of get a recross on these moving averages, boom, I'm going to be shorting alts versus BTC where I get signals. If we can, if instead we bounce from here up and into a death cross, and then we take out this trend line and create a lower low, right here is where I will be feeling very confident that alts are going to rally against BTC for a prolonged period of time. I mean, these rallies happen for a while, like a year, even more. Like BTC's been bullish against alts for 2 years. Anytime people have been talking about alt seasons, it's just been a correction. This is the alt seasons here. These aren't alt seasons. This is Bitcoin regaining dominance, and that's been going on for 2 years. Now, if there is a change in the tide, then we're going to be looking at potentially a 6-month, a year, maybe even another 2-year trend. And getting in on the first like 10% of that is exactly what I would be looking at right here. If we break down this trend line, I'm going to say, okay, this 2-year trend is done. And therefore, it's highly likely we're going to react with another prolonged trend, at least 6 months I'd be looking for. So if we broke this trend line, that would be my thought process, and therefore I would be looking to sell a bounce. Okay. I am way out of energy. And one last look at the chat. We'll call it a day. Okay. Looks like a lot of good comments. Some people providing some good input. Good to see you, Agartha. Appreciate your input as always. And see Fibbo Swanee, great to see you. And let's see here. I think that is going to be me calling it a day. So my computer is trying to freeze. Thank heavens it didn't while we were still streaming. So thank everybody for tuning in. As always, really appreciate you for subscribing, commenting, smashing the like buttons. All of that means a lot. I am approaching 5,000 followers on YouTube and 10,000 followers on Twitter, so that's really, really exciting. Will be great to cross those thresholds for sure. And I guess before signing off, we'll just a couple more shills for anybody that wasn't here at the beginning. We do have the unconfiscatable conference coming up. If you go to tonevase.com, you can click on workshops. And there is still 5 seats left for my advanced Consensio workshop. Costs $500 and will come with a year access to the MSR indicator as well as the Telegram group. If you sign up, I'll get you access to that right away. Okay, so appreciate everybody that already has signed up, and definitely looking forward to meeting you guys out there, hopefully having a good time. I'm sure that that will be the case. And with all of that being said, thank you guys again, and let's keep our fingers crossed for this being the first month or so of the next big bull market in crypto, specifically in Bitcoin, with the halving only months away being generally the best time to buy into crypto and Bitcoin specifically, and holding on for about the year or two after that halving occurs has been a very good bet in the past, and I am keeping my fingers crossed it'll be a very good bet again. So thanks again, everyone. Catch up with you later.